The time had come. You know, we have a big loss in Meta, like many investors have. We're starting to face year-end. Tax loss selling kicks into play. But that wasn't the reason. Clearly, the move into the metasphere and the model that's going to exist when it exists is way out there. Everybody knows that. But when I start to see activists beat it up and start to push on every single angle, this is before the note, the rumors are in the street that many shareholders were unhappy and pushing at the company. So you know that is going to put pressure on the stock, just from the fact that shareholders like me are facing year-end and saying, I've got to sell some of my losers. So between now and December 15th, the stock is going to be under tremendous pressure because it's an institutional holding around 2.5%. When people look through a reason to own it going forward in a slowing economy, it's really hard to stay long. And I'm just like everybody else. I looked at it and said, where can I deploy this capital elsewhere? There's many other options where there's great value and less pressure on this whole metaverse issue. And I sold it. And we took a huge hit on it. Sometimes you get it wrong. I got it wrong on Facebook/Meta. And now I'm willing to move on and look at it again in the future. I'm willing to look at this stock again when you can prove to me what Metaverse looks like and what the business model's like, because I believe in billions of users. So
you're not the only, as you suggest, unhappy shareholder. I think we can characterize Brad Gerstner as somewhat frustrated. He wrote an open letter. He, of course, of Altimeter. He's a frequent guest on our program, and many of you know his views on the matter. He has been a steadfast supporter of Meta, Facebook, and their management team. However, he writes an open letter today. Here it is. It's to Zuckerberg and to the board, in which he says, quote, Meta has drifted into the land of excess. Too many people, too many ideas, too little urgency. This lack of focus and fitness is obscured when growth is easy but deadly when growth slows and technology changes. The facts, he says, are startling. In the last 18 months, Meta stock is down 55% compared to an average of 19 for its big tech peers. Your PE ratio has fallen from 23 times to 12 times, now trades at less than half the average PE of your peers. And notably, this decline in share price mirrors the lost confidence in the company, not just the bad mood of the market. And then he goes on, Weiss, to recommend a 3-step plan in which he thinks will help fix the situation. He just says simply to me when I talked to him earlier, the age of excess is over. And they need to lose some of the weight that they had on when times were rich. And now they're going to be more lean, and they need to be leaner and meaner. This one may be more than most because of all the reasons that Gerstner laid out for the reason why the stock is down so much. What do you think?
Well, first of all, Brad's a great investor. We know that. We've seen his numbers time and time again. And his ideas are all good ones. But the question is, are they going to take hold? And the answer firmly is no. That Zuckerberg's not going to do a 180 and say, hey, I'm giving up on the metaverse. He changed the name of the company to it. So I came on the show a couple of weeks ago and I said I'd be a seller. And I'm not ready to short it because of the valuation, but the time will come because the metaverse, look at how Facebook got into business, right? They weren't necessarily the first ones to do the Facebook. I mean, you had MySpace doing it, but it was a category they essentially created and they won. They're late to the metaverse because you've got Unity, you've got Epic Games, et cetera, and it's a commodity basically, and you don't know what that's going to be. So it's going to be 10 years, even if it's only $5 billion they're spending, it's still quite a bit. While their core business is atrophying a little.
Well, see, one of the problems
I wouldn't own it.
One of the problems that Gerstner has is he says they have let the narrative. Brenda, you own the stock too. He says they have let the narrative take hold that they are only focused on the metaverse, and all they care about is getting to that pivot point whenever that is down the road, and it obscures the fact of how strong the core business is, as if they don't care about it anymore, and it's, the metaverse or bust. Now, I'm curious as to what you think as a fellow shareholder like Gerstner, a former shareholder like O'Leary, and whether you're thinking about making a similar bounce out of this thing.
We are not considering selling it at this point, just given the valuation is so down and out. And we agree that the core business is strong. I mean, there's 3 billion daily active users. There's a lot of value there, and certainly a significant competitive advantage within the industry. But I agree with Brad Gerstner. This is a time when especially during times of crisis or times of economic downturn, that many companies can use to relook at their core business and figure out how to cut costs. They could certainly change the narrative without changing the name of the company back to Facebook, but change the narrative so it's not as focused on Metaverse and certainly is focused on this incredible core asset that they have with the core business. So that is why we're continuing to own it, because of the value we see in the core business, not because of growth we see coming from the Metaverse potentially. But we would hope that during times like this, the management team would refocus on profitability and focus on that core business.